For this series of sharing, right, I'll be talking about fundamental investing. When I talk about fundamental, I'm not just talking about fundamental analysis. We're talking about technical options and even quant trading. But this one, every single week, I'll focus on one segment because I realize that a lot of people are pretty beginners in investing. So this segment is really for beginners. So if you're a beginner, you have invested for less than 1 year, you can type me. If you're an expert already, this one may or may not be for you. So I just want to say that up front. Okay. So we do have like other expert courses. Those are paid courses. And this one is really a service for those who really don't know how to invest. I really want to teach everyone at least how to invest in a basic manner. Basic doesn't mean doesn't make money on. Sometimes basic is pretty enough. So in fact, after you listen to basic investing, right, if let's say it bores you, if let's say it's something that you don't really want to handle, right, you shouldn't even go for advanced investing or investing courses. A lot of the investing workshop, maybe I just share with you my perspective. It seems like, wow, this guru can make a lot of money. That guru can make a lot of money, and it seems so easy. It is because most of us, we invested for years and years and years. We have gone through ups and downs, and we have developed our own strategy. Now, a train of thought for you guys, just a food for thought, okay? Food for thought. Do you realize, right, almost every so-called successful investor, if you hear their stories, right, it is always the same. They will go and learn investing. They will lose money. They will go and learn from people. The strategy somehow works for other people, don't work for them. They will refine the strategies, and finally they develop something, and then they start to become successful. That's why now they are teaching you their strategy, or even myself, I teach you my strategy. Now, does it sound familiar? If it sounds familiar, you can type 1. Now, I realize something, it's not fake, but there's one common thing I realize. It's all of us, eventually, we refine our own rules, we develop our own strategies that's suitable for us, okay? So later at the end, if you are more advanced, I can give you some insights of a new program that we're coming out with. But for now, let's talk about investing university. Now, last week we talked about, before that, disclaimer, I'm not a financial advisor. I'm not licensed. I'm not giving you financial advice. It's not a recommendation to buy or sell anything. It is just what I experienced, and I just want to share with everybody openly. So do your due diligence and don't just buy things because I said something on the internet. Okay? Are we okay with that? If okay, help me type okay. Now, in homework 1, we talk about setting up your brokerage account. Homework 2, we talk about your company shopping list. So later we can go through the brokerage account. The brokerage account, we talk about using interactive broker. Let me just show you how it looks like, IBKR. And let me maybe just show you how to just buy and sell some stocks, because otherwise I realize some of us, we have been investing for years, so we cannot remember like what the beginners don't really know. Buy stocks, sell stocks, very easy. But I mean, when you're very, very new, it is like almost impossible to navigate, right? So many things to navigate. So let me go into my IBKR and just do a demonstration of how to buy and sell a stock. Can anybody give me a stock tip? Like, what should I buy now? Is there a good stock to buy now? Let me see. Palantir. Don't like that, okay. You all want me to lose money, is it? Okay. I was actually sharing with a group of investors, right? I think if you're very, very new, I will highly, highly suggest that you take probably maybe $1,000, $500, depending of what you can afford, right? And then go and lose the money first. Okay, go and lose the money. Year to date, make 4.39%. Not bad, huh? So this is just within 14 days. 1 year, let's see, our results about 125%. This is not ordinary results. This is through a lot of, I would say, research and also a lot of hard work. Investing is not that, I would say, easy. If you buy S&P 500, you can see it's about 20%. You can see S&P 500 is about 20%, make about 120%. Now, let me give you some examples of how to buy and sell stocks. Okay, I have some examples here. Let's say Coca-Cola or Pepsi. Pepsi dropped quite a lot, but it's not a recommendation to buy or sell, okay? So again, okay. So once you click, okay, when you go into interactive brokers, this is the portion that you can click the ticker symbol. So after you have interactive broker, log in, the web version looks like this. I would suggest for beginners, look at the web version. If you are more advanced, you can look at the downloadable version, which is called Trader Workstation. But let's start from basics first. So go for any stocks. You can type S&P 500. You can type Pepsi. You can type, let me try Microsoft. Let's see what happens. Microsoft, you can see they will have this. Look at, they are listed in quite a few places. So go for the one in US, NASDAQ, and things like that. Okay, so Microsoft. Now, for interactive brokers, just to share with you a few functions, they have these beautiful charts. This is from TradingView. For those who are familiar with TradingView, you will realize it's exactly the same, and you can use all the indicators and functions of this. So as of now, not a good time to buy Microsoft from my opinion due to technical indicators, which we will be covering subsequently. Okay. So now, assuming that you want to buy, let's say Microsoft, but assuming you say, oh, Microsoft is quite cheap. Okay. I'm just showing you the functions of how to buy, right? You can see there's this cute little button called buy. Click on buy. And let me ask you guys a question. What is the minimum number of shares I can buy? What's the minimum number of shares? One, correct. Okay, so it's one. Someone is asking, how do I get TradingView chart on interactive brokers? It is by default. It is already there. So once you type on Microsoft again, okay, Microsoft, or let's say you talk about Meta. Meta, you can see Meta platform. I type in, I press enter, they will give me choices. I click on this. By default, they will show me code, which is the stock code prices, the price of the Meta right now, and they will give me the chart. Oh, well, Meta looks pretty good actually. Okay, so well, I'll not go into details of the technical portion, but for me, you all can do a screenshot as a reference. For me, I like to use moving average 200, 50, and 20. Okay, but typically moving average 200, and I can see that it is going like probably hitting a certain support. Okay, so assuming, let's say I want to buy. If I want to buy, cute little button here, click buy. Buy, I can buy up to one Meta stock. And today we are talking about just buying and selling stocks. I'm not talking about options. Okay, we will cover that another day. I'll go through it step by step. So do join me every Tuesday. That's where we can go through it step by step. So you can see that, okay, a few things. You see that Meta's price is 609.30. Again, very, very basic. Where did this number come from? Okay, let me share with you a few things. You can see there's ask price and bid price. Now, I want you to see this like a carousel or eBay or a Yahoo auction. Have you heard of auctions before? If you've heard of auctions, how many type A? If no, how many type 0? I don't know what's auction. Auction is basically, right, I'm talking about online auction. So your stocks is an online auction. So there are people who have this stock, Meta stocks, they want to sell their stocks, and people who don't have the stocks, they want to buy. Or maybe they want to buy more. So there are people who want to buy, people who want to sell. People who want to sell, they will have an asking price. Like, hey, if you want to buy the car, I want to buy your house, what's your asking price? Asking price is the price I want to sell at. So there's people who want to sell, they say 610.4. Now, people who want to buy, they have the bidding price. Remember auction, they will bid. Okay, bid. So this is a 609.6. Now, in fact, right, actually, for more advanced, so for those who are already very advanced, you can look at this thing called order books or order flow. These two prices are the nearest price that match each other. So very likely, there are a lot of people with Meta stock. Some of them will put 620. Some of them will put 630. So they will take the lowest asking price. The lowest is 610. Okay, so a lot of people, they will actually place the price that they want. And for people who are buying, some of them, they want to buy cheaper. They want to buy at maybe $605, $604. Again, they will show the two nearest matching price. Okay, there's a way for you to see the whole entire list of prices that people are bidding and asking for. But for now, let's keep to fundamentals. So where did this 609 come from? 609 is the last transacted price. Just like we were here, this HDB in Bukit Merah or somewhere sold for 1 million. Where did that 1 million come from? People will want to buy, people want to sell, they bargain. In the end, transacted, shake hand, pay $1 million. So if you see 609 here, means that someone paid 609, someone sold at 609. So they will always be bargaining. Can you see? I want to get it at 609.65. No, I want to buy at 609.60. Give me 5 cent discount. So they will keep bargaining until someone relent. Then finally this price change. The market is not open. That's why this price is not changing. But they can keep putting different price. This is by real people and even market makers. Okay, Ken? So this is how the whole landscape works. So if you are very, very new, oh yeah, correct. IBKR do allows partial, but let's keep it to simple stuff first. In case people cannot understand. Okay, you talk about like putting certain USD price, right? You're not wrong, Alvin. So let's talk about buying 1 shares and 2 shares first. Okay, Ken? So because after that, want to sell also a little bit more difficult when you talk about fractional shares, okay, or partial shares. So let's say you want to buy 1 share, okay? You can see that there's a few things I want to show guys. The order type, they will give you by default limit, and then this is the price you can key in. They will give you a default price. The default price is usually the ask price. You see, 610.4, 610.4. When this one change, this one should change. So meaning you say if you click buy now, they will match you with the seller. The seller is asking for 610. So immediately, basically they say, okay, you just pay what the seller want, immediately you get it. But if you don't want, you can change to 609.5, example. Let's say 609.5. You can do that. You can bargain a little bit. Okay. When you put limit, it means that I want to bargain. Day enforce. Okay, I'll go through another session where we talk about all the details. But by default, this will be good enough for you to click buy. Okay. And then it will become a buy order. So it has been submitted. Okay, submitted. Okay, they will have a notification. It's not immediately executable because the market is not open. I will use the algo order. So if it's too far away, I'll not buy. Okay. So this order has been submitted. That's it. Okay. So if let's say it goes through, I have to pay 609.5. And eventually, if the price goes up or down, I can go and sell it. Okay. So this is how we navigate the brokerage. But now for today, I'll just show you one portion, which is how to buy. Okay, but why do we even want to buy it? Let's go and look at the company shopping list. So homework done. Good job. I see a lot of people want to buy Microsoft, want to buy a lot of Microsoft. Okay, so some very interesting one I also never see before. Good job, good job. Again, after we get all these ideas, right? Where do we get all these ideas from? Talk to friends, go and look around, go shop around. Like I told you, my children, right? When they buy the stocks, it's because they see us using the particular product. So today, right, I want to share with you. Let's assess the stock. Let's assess the stock. So there are few things that we can assess the stocks using fundamental analysis. Three main statement: income, balance sheet, and cash flow, which I'll show you in a moment's time. So let me show you a few things, and how to do it using a practical manner. So, okay. So first of all, let's talk about where to find this thing called income statement. Income statement is what they call profit and loss statement. And after today, right, if you are very, very new, first time looking at income statement, I tell you, after you look at today's segment, right, you will be a lot more confident what stocks not to buy. You'll be very, very obvious to you. Wow, this one cannot buy. Okay, this is what I think will happen. How many of you are very new to this? You have not heard of income statement before? If you are new, help me type 1. If you are okay, you have actually quite familiar, you can type 5. Okay, so who are the new ones? 2. Okay, so for those who are very, very seasoned, again, pardon me, please share with me your insights as well. So where to find income statement, right? There are many places to find. The best or most traditional way to find is to go Google. Okay, and then for example, you want to find income statement of Walmart, because I saw someone put Walmart. You can put Walmart annual report. You type Walmart annual report, they will typically bring you to annual reports investors relation. Every listed company should have this investors relation website. Then you can click on the annual report. Then you have the annual report, and that's where you will scroll down and look for the income statement. Okay, so they have financial statements. Okay, you can see item number 8, financial statements. Okay, you click on this, you scroll. Statements of income statement. Okay, so this is very interesting. So just by looking at this, later I'll show you guys a more summarized version. But quickly look at this. Can you tell me, is this company making money? Yes or no? Okay, now a very quick one. In case you're very new to this, see so many things, right? Have you heard before? We need to increase the top line. We need to improve the bottom line. Increase top line, improve bottom line. Where's the top line? Top line is at the top. That's why it's called top line. Okay, so what is top line? Top line is this thing called revenue. Now, what is revenue? In simple terms, revenue, okay, actually I wrote a whole entire repository for you guys. So these slides will be given to you. You can actually take a look. Revenue is the total amount of income they generate from its operations. In other words, right, revenue is the total number of money, amount of money that they manage to make from their customers. This year, how much the customers pay them. Got it? This is called revenue. So have you heard before Walmart, by the way? Is it a good example? We can use other examples though. Later we can use other ones. Okay, so revenue is how much they collect from their customers. And from here, you can see a few things. You can see net sales. So net sales are the amount of things that they sell inside their shop. Walmart is a big supermarket. Okay, so these are the amount of net sales. And take a look at this. Typically, they will show you a few years. Because by a number itself, you may not know. But 2002, 2003, 2004. Do you all notice that the net sales is increasing? Is this a good sign? Do you like to buy a company that is making more and more sales every single year? Okay, so later we go and see whether are there companies that their sales keep going down, and then don't go and buy lah. Okay, now on top of net sales, right? They also have membership and other income. So you can actually pay to become a Walmart member. And wow, let me show you. So the membership doesn't seem to be growing as fast, but it is something which I know to be recurring. Okay, recurring. So maybe the amount of customers did not increase, but the amount of things they buy actually increased. And these are all in millions, by the way. Millions means, right, how much membership fee did they collect in 2024? They collect $5 billion. Okay, $5.4 billion of a membership. Oh, do you want Walmart to work for you? Okay, think about it. So total revenue, you can see from 500 over billion to 648 billion over 3 years. Over 3 years. So now one look, what's your impression of this company? Okay, what's your impression? Report card, this is a report card. Do you think it's positive, negative? Upon 10, how many points will you give? Well, for me, I thought it's pretty good. Okay, now the next thing that we look at, right, is cost and expense. Actually, you can see it's very neat one. The income statement is very neat, and the words is almost self-explanatory. It is just that because sometimes we are not used to seeing it the first time you see it. Now, first thing you will see, right, cost and expense. You will see this thing called cost of sales. Later we compare it to other income statements. You see whether is it the same. Cost of sales. What does it mean? It means, right, for you to sell all these goods. Okay, for example, Walmart, the supermarket, they sell like maybe roasted chicken. They sell TV. They sell, what do they sell? I don't know what Walmart sells. Okay, they sell bicycle. Now all these bicycle, they collect the money, correct? But it also costs them money to make the bicycle. It costs them money to go and cook the chicken, or not cook the chicken, go to buy the chicken. You get what I'm trying to say? So it costs them actually $490 billion to sell you something and get back $642 billion. Wow. Every year they spend so much. But again, this is the cost of sales. And you can see something. Cost of sales keep increasing as well. Okay. So is this good or is this bad? Cost of sales keep increasing. Well, it's in relation to the net sales, correct? The more they sell, let's say this year we sell 1 million bicycle. Next year we sell 1.3 billion bicycle. I don't know why I'm using bicycle, but I thought more tangible. So definitely our production of the bicycle is higher. That's why we have to spend more money also. Okay, is this clear? So you can see, I can tell you, right, all these numbers tells a story. You can almost see it and imagine what happened that year. It's so beautiful. Okay, to me it's beautiful. I don't know, maybe to some of you guys feeling seasick already, like okay. So this is cost of sales. Now the next portion is operating, selling, general and admin expenses. What does it mean? Operating means, okay, you're operating the shop. You have to actually pay rental, you have to pay the electric bill, you have to pay the salaries and things like that, right? So this is operation. So selling, probably like marketing. General and admin is your back end. Okay, so like the accounting, all the support staff. I mean, if you work in the workforce before and you know that there are different departments, you know that every department, they come here is because they are making a salary, not because they come here to do charity for the company, correct? So the company need to pay. So these are all the expenses. Can Okay, so all in all, after the revenue they collect, collect 600 billion, but spend so much also. Spend almost 500 billion here. Spend another 110 billion here. So add up together, okay, you can see the operating income, right? Operating income, okay, or they call it the gross income. Sometimes they call it the gross income, is basically your total revenue minus away the expense. Okay, this expense is in support of getting the revenue directly. Okay, it's in support. So if you don't spend all this, if you don't have the cost of sales, you don't want to make bicycles, you don't want to actually get chicken, you don't want to have shops, you don't want to have your accountant, you cannot get this revenue one. You can't get this. So that's why it's called the cost of sales. That's okay. Got it now. So in total, after minus away everything, not say make a lot of money, $27 billion only. And you can see something interesting, 2022, their net revenue is 500 over billion. Okay, their operating income, so after away minus away everything, is 25 billion. 2023, actually they make more. They make more revenue. They collect more money from their customers. However, at the end, the money left is lesser. Why? Very simple. Their expense is a lot more higher. It's improportionally higher. Can you see that? So in the end, and then their operating income for their 2004 actually improved again. So from 25 billion. So in the end, you say, you tell me how much you collect from the customer for what? If you spend too much so that you can collect from customers, also doesn't benefit me as a shareholder. Correct? 25 billion, 20 billion, 27 billion. So what's your impression right now? So is Walmart good company, profitable, not profitable? Okay, that's one. That's why after one income statement, right? Maybe confidence drop. Initially, see revenue quite good. Wow, good company, good company. But they don't seem to be able to control their cost very well. Oh, cannot. How to see whether is it million or billion? Look at my mouse. You see here a mouse in million, except for per share data. So they will write here. They write here. Okay. It's not like anyhow like have a feeling on. Okay, but because I already know about this company Walmart, and usually US listed company, all these numbers is in millions. Okay, usually. Okay. Costco later we can go and take a look, or maybe it's your homework. Okay, but have fun doing it. Okay. So now this new portion understand all. You can almost imagine what happened inside the shop of Walmart. This other portion, right, is not so totally related to the operation. It's called interest. Oh, what's interest? Interest is you put money in bank, you borrow money from bank. All this is called interest. So the first interest is debt. Okay, so let me explain something. So for income statement, right, typically only the top few line is make money on. Okay, the rest is all pay money, pay interest, pay tax, pay all the costs. Got it? So only the first few line is to make money, collect money from customer. Oh, very happy. Then I have to pay this, pay that, pay bank, pay all the things. Got it? So when you see debt, this number is to minus off one. So you have to minus off this amount. Okay, what do I mean now? Let me show this first. So you can see they have to pay 2 point something billion dollar in interest in debt. Cool. They owe so much money. Okay. They also have finance lease. Finance lease typically is probably maybe their property lease and things like that. Okay, also another 400 million. Okay, can you see interest income? Interest income means they take their cash, go and put somewhere. Usually put inside bank. You can see bracket, right? It's because they make money. Make money, why is it bracket? Okay, let me try to explain this in a simple, non-complicated terms. In accounting, bracket means minus. When you see bracket means minus. This whole entire segment is actually talking about how much interest are they paying. Okay, so when you say that I pay minus interest means I get interest. Okay, accountants actually sometimes they make the things a bit complicated. But in short, what they want to find is the final figure that they are paying. The interest, the net interest that you're paying is how much. So okay, I pay debt 2.2 billion. I pay finance lease 400 million. However, I earn 500 million in interest. So all in all, I take this plus this, because these two I pay minus away this that I collect. My total interest that I pay is 2.1 billion. So far, is it clear? If it's okay, help me type okay. Oh, you're gone already. Okay, so these are numbers. These are numbers that basically we don't need to go through. I mean, it's a good practice to go through every single thing, but to understand every single thing is good. Okay, so you can see other gains or losses means it is not really totally related to interest, not related to their revenue. Okay, what do I mean? Maybe. Okay, this one we must read in details. But other gains or loss, sometimes, they have a property, then they sell away. Okay. Or like for example, let's say they sell away some of their trucks and then they make some money, okay, or they lose some money, okay, things like that. So all in all, you can see this is their revenue. I summarize for you. This is their revenue. Their total revenue 600 over billion, but it costs them 27 b. It costs them this amount, 500 over billion to operate. So 600 billion minus 500 over billion left 27 billion. Okay, it's not left It sounds like very little, but 27 billion is still a lot. They still make 27 billion. This 27 billion, they actually pay off their interest, loan, everything, which is about 2 over billion. Then they get some income. Did they get income or reduce income? Or they have to pay some income. They actually make some losses from somewhere now. Okay, so all in all, 27 billion after pay finish interest, pay finish some of the other gains or losses. It is left 21 billion. How do I know? You can see income before income tax. They haven't paid tax. So this is the amount of money that they will tell IRAS. They will tell, okay, this year this is how much you make. So IRAS say, thank you very much for making so much money. Now, okay, now pay us $5 billion. This is their income tax. You see? This is their income tax. Where did this income tax come from? It comes from their income before tax. So after they pay finish income tax, left 16 billion. Sounds very gloomy. Okay, I shouldn't use this kind of tonality. It's not really that sad because they are still making $16 billion, bro. Okay, so got it. Yes, small print at the right in the top. Yeah. Why is it millions? Is it? Okay, yeah, correct. So I think you're answering that question. Later I'll show you guys. But I want to explain row by row first. Later we can go into a summary version. Okay, can So the consolidated. Okay, there's one more thing. So after you provision for income taxes, right? Okay, is 16 billion. Now, a lot of listed company will have this consolidated net income loss attributed to non-controlling interest. Now, what does it mean? What does it mean? Now, you see, right? Walmart and some other big companies that's listed, they like to buy other companies. So maybe Walmart like to buy the petrol station nearby. Walmart like to buy another bakery nearby. Okay, so sometimes when they buy, they don't buy over the whole company. They buy over maybe 60% of the company shares. So I buy over 60% of the company shares means every year, how much money you make, right, goes to me. So if let's say, example, Walmart buys a petrol station, which is very common now, by the way. So the petrol station, let's say, make 1 billion. So you will see 1 billion in this revenue, right? Okay, maybe it's here, maybe it's probably one of the other income. It is from the petrol station. However, you must understand, they only own 60% of the petrol station. They don't own 100% of the petrol station. So 40% they must deduct off. So that's why they say consolidated net income loss attributed to non-controlling interest. They must minus away another 40% because it's not really theirs. It actually still belongs to the petrol station. So got it. So at least understand roughly. Sorry, later actually I got all this. You all can read through all this. I mentioned all this. It's all here. I forgot to actually go through this step by step. This one is a lot more details because Walmart may not have written all this. Got it. Minority interest, okay? Allocated to minority stakeholders. Can So all these you all can go and read through. If not sure, can go and look at Investopedia or even ask ChatGPT. Okay? So all in all, this is the net income after tax. After calculating everything, this is the net income of Walmart. So now let's take a look. Walmart in 2022 make 13 billion, then make 11 billion, then make 15 billion. So is it considered a good company? What do you think? Okay. So actually, the most important, if you want, is the top line and the bottom line. How much money they collect from their customers. And in the end, they finish everything, how much money they still have left for the shareholders. Okay. So now, in the end, every single shareholder, right, we don't get that 15 billion because there's many shareholders. So all the shareholders, we must divide. Okay. Divide finish, every shareholder, every single share I have from Walmart, I make $1.92. Basic net income attributed to Walmart. Okay, per common share attributed to Walmart. So if I'm a Walmart shareholder, this year, my one share makes me $1.92. Do I get the $1.92 into my pocket? Answer is not yet. Okay, what do I get? I get the dividends. 76 cents is issued as dividends. So they make about $1.92. They give me 76 cents. So far, can you understand? Okay, maybe I go in a little bit more details because that's why I want to spend time going through all this now. Okay, diluted net income. What's the difference between basic and diluted? Did I write that in my notes? Let's see. So it is actually talking about stock options and things like that. Okay, basic is the net income, how much Walmart make, divided by all the shares. Okay, every single share is divided. Now, diluted, right? They also count to the fact because, right, sometimes Walmart and a lot of listed companies says that, hey, this CEO, right, we want to actually employ this CEO. This CEO very expensive. We have to pay him $20 million per year. Let's pay him $15 million in cash. Another $5 million, right? We give him stock options. You know options, right? Call options, put options, right? They give him stock options, means usually it's call options. They have so meaning to say this CEO has the right to buy the shares, 5 million worth of shares at today's price. So they say that, hey, Mr. CEO, I give you $5 million worth of shares, you can buy at today's price. Let's say today Walmart is what price? Let's go and take a look. Let me explain to you the psychology. Because as shareholders, once you understand all this, I can tell you you are way ahead of a lot of investors. So today is $91. So I tell my CEO, okay, I'm going to pay you bonus of 5 million stock options. Means you can buy $5 million worth of Walmart at $91. So CEO, what should you do? You should work very, very hard so that next year our share price become $200. If it becomes $200, remember, you can buy them at $91. So immediately, right, you make another 5 million, you know or not? Does it make sense? Okay, so this is how listed company print money. Because they don't really pay the CEO. They pay him stock options, which actually it is not cash. It is what they say one. They just say can already. And it's legally correct. I mean, it's legally done. In case you all didn't know, even if you have a company in Accra, every single year, you can dilute your company by 30%. You can say, I'm going to give another 30% shares to someone else. And these shares can be stock options also. Now, but if you say that you give these 30% shares to someone else, right, where does this money come from? Because when you're doing that, you dilute the shares. So that's why there's a diluted EPS. Whatever they promise the CEO, whatever they promise the employee, they say in case the CEO really go and buy all these shares, you must print these shares out, you know. You print these shares out, I got more shares already. So it means that initially I'm a shareholder, now I have to share the company with even more people because there's more shares. Okay, so it's diluted. Therefore, if it's diluted, how much is it worth? Okay, so you can see right here, diluted amount, you can see diluted net income is always lesser than basic. Basic means we never count all those shares that you promise. But now we count the shares that you promise. Actually, I make lesser. Okay, got it. So you can see this is the number of shares. This is the number of shares that is inside the stock market. $8 billion, 8 billion worth of shares. Now we can see that the Walmart go and promise about 100 million worth of shares to their employees and things like that. Stock options. Can you see that? But haven't become shares yet. These are usually just stock options, haven't diluted. Am I making sense to you guys? If it's still okay, can you help me type Y for yes? Still here. Okay, got it. Yeah, diluted EPS help to motivate the CEO to push up the share price. So they say, hey, you also benefit, huh? Okay, so actually this income statement, now with this income statement, right? Let me show you another place to look at it, which I prefer. It's called Jita. Again, I'm not affiliate. I mean, I know the founders. You can create a free account with Jita. And let me share with you what's the benefit of using Jita. So example, you search for Walmart. Okay, you go to financial. You go to financial, you can click on income statement, balance sheet, or cash flow. So income statement, you can click on annual. Now, so just now we can see three years only, right? Now for Jita, you can see 5 years. 5 years. So immediately, and then it's very easy for you to go and search for the company's finances rather than have to go to every website, go and click. Okay, so okay, let's take a look at Walmart. Walmart, you can see the revenue. Okay, over the past 5 years, the cost of goods sold, the gross profit. So gross profit, and then okay, so you look at the top line revenue, is it increasing? You can also look at the bottom line. Bottom line, where is it? Net income. You see net income. So net income over the years, 14 billion, 13 billion, 13 billion, 11 billion, 15 billion. What do you think of this company? Any comments when I show the report card? Is it good? Is it bad? What words will you use to describe this company? Diluted is basic plus all those other shares that you promise. It's good. For me, I think it is not much growth. It's correct. Not much growth. So it's 14 billion, 13 billion, 13 billion, 11 billion. It's okay only. To me, it's okay. Do you all see that? Some of you feel that it's good. It is good if you just want to collect dividends. Later, I show some other companies. Okay. For these stock options, does it exercise in the market or these are brand new shares? Okay. There's a different ways of calculating. Sometimes you'll see that company do shares buyback. When they do shares buyback, right, it means they spend like $1 billion, they buy back shares from their shareholders, and then they keep in a depository. So this depository, they can use it to give to their shareholders. Okay, use it to give to their, I would say, employees. So when they keep in a depository, right, means that it's no longer in the stock market already. It's no longer outstanding because they actually use company money to buy back these shares. So when diluted, right, they can actually release all these shares back to the employees. But anyway, you think about it. If they buy back the shares, they retire the shares, it's actually no more shares. So it's basically they can just create shares, they can print money. Actually, listed company, technically, they can print money. So a very common practice I can share with you is companies, they suddenly buy over the other company. When I want to buy over another company, I don't have money, I print shares. I say I give you how many millions of my shares. And because my share price is worth this much, I print how many million is worth how much. So it's a bit of a cheat code if you become a listed company. Now, that's why it's very important guys. Listen very carefully. It's very important. Income statement is very beautiful. Now, very important, right? We want to look at this thing called per share. So in the end, I have to protect myself. Even the company make 15 billion, 100 billion and all that. But if their shares, right, is more and more. Okay, you can see. Actually, you can see for Walmart. For Walmart, let me show you this. You see 2020, 2021, 2022, 2023, 124, right? Can you see this line? This line called basic shares outstanding, weighted average basic shares outstanding. What is weighted average? Weighted average means the beginning of the year until end of the year. Sometimes they buy shares back, sometimes they sell shares. Okay, this is how much shares left. Now you can see in 2022, how much shares are there? There's $2 billion worth of shares. Can you see? Again, this is in millions. Then 2024, right? They have 8 billion worth of shares. Now imagine you are a shareholder. Maybe did they do reverse stock split or what? Maybe they did. I don't know. Okay, but you think about it. You think about it. If let's say initially there's only 2 billion of us owning this company, now there's 8 billion. It means that whatever the company make, now I have to share with $8 billion. So you can see EPS, earnings per share, every single share's earnings. Initially, every single share makes me $5.20 one. Now it only make me $1. I suspect it's a stock split. I suspect. Okay, you get it? So it becomes very diluted already. You can see my shares suddenly become diluted, but cannot be jumped so much. Immediately, I think there's a stock split in 2022. Okay. Okay, now. So is this company good or bad? We compare. Okay, well, my mother say don't compare with other people. Actually, my mother always compare, but no, I'm just kidding. So we compare, then we know whether it's good or bad already. So who do we compare with? Yeah, so someone mentioned Costco, right? Costco. Let's compare with Costco. You don't have to always compare within the same industry. Okay, but let's look at financial first. Financial income statement annual. Okay, compare. This is Costco. This is Walmart. So I switch between Costco. So Costco. Okay I go straight to the bottom first I look at the net income. Net income, 4 billion, 5 billion, 5 billion, 6 billion, 7 billion. This is Costco. So okay, compared to Walmart. This is Walmart. Okay, you can see Walmart. The numbers bigger. Walmart is a much bigger company than Costco in terms of income. 14 billion. Wow. 14 billion. Then 4 billion only. Then 14 billion already. 14 billion, 13 billion, 15 billion. Costco, 4 billion, 5 billion, almost 6 billion, 6.2, 7 billion. Which company better? C or W? C is Costco, W is Walmart. Which one is better? Actually think about it. Okay, so we haven't looked at share price yet. But it seems like if let's say I want to invest, I rather a company that keeps making more and more money. And the earnings per share. Remember you talk about EPS is earnings per share. My share, if I buy, it makes me $9, $11, $13, $14, $16. Next year, you think will be how much? Maybe $17 or $18. Okay, predictable. So in fact, one of the principles of fundamental investing, right? When you look at all this, you like to look at companies that is predictable. Okay, these two are good companies. Can you give me a lousy company? anybody can give me a lousy company. Okay, so we compare with. So I think Costco, in some sense, just by looking at income statement, their income is increasing. Okay, let's see. Got any other lousy company or Dollar General? Okay, Costco is here. Let's see Dollar General. I also don't know. Dollar General is also like this one not a supermarket but more like a convenience store, like a Daiso kind of. Actually looks okay also. Gross profit also increasing. Wow, supermarket in US like quite good to make money. So net income, how you see net income 1.7 billion, 2.6, 2.3, 2.4, 1.6. So actually, what do you think about this company? Dollar General. Will you invest in this company? So Dollar is D, Costco is C, Walmart is W. Which one gives you more confidence when you look at this? They give you report card. Okay. So is it cool? Like see, once you take a look at I would say once you take a look at the income statement, it becomes very, very nice. Okay, now I give you an additional thing. This one is a little bit more advanced. But I share with you something. You can go to fact sheet. This is something I really like about Jita. You can go to fact sheet. So under fact sheet, right, you can click on this thing called customize. So later you all can watch back this video. Don't worry. Oh, I really burst my timing. Now it's already okay. Don't mind. I spend a bit more time to explain to you guys this. So under oops, under fact sheet. Hang on a minute. Okay, under fact sheet. Okay, sorry, it is here. Customize. Can you see this blue button called customize? You can put what you want. So example, if I don't have revenue, don't have income, don't have earnings per share, right? I can search for revenue because this one give you 10 years. Yeah, okay, revenue added. Okay. Then I can net income added. Where did I edit? Okay. So you can add whatever you want. Let's say you want to add, what other things do we add? Let's say we add R&D, research and development. I can add also. Okay, research and development. Okay. So update fact sheet. No, my revenue disappear. Wait, let me just customize again because just now I delete the revenue. Okay, add. Revenue is here. Net income. net income. You can see net income before a lot of things you can add, but I go for pure net income, and then I go for earnings per share. Earnings per share, like every single share, how much it makes. So revenue is the top. You can see it. You can drag and drop. Revenue is top line. Net income is bottom line. Earnings per share is every single share. So after I update, right, let me show you. You can immediately see already. So Dollar General, okay, it is from 2016 to 2024. They give you 10 years record. One thing you can do is you can just click on it. They show you on the screen. Actually, revenue not bad, right? It's actually making money consistently. Click away. Let's look at net income. Oh, net income, not so good. Okay, going down. And then earnings per share is also like flat. Okay, not so good. Where else, when I look at Costco, okay, let's take a look at Costco. So you can compare company by company. Quite easy. Okay. Costco. Okay. Fact sheet. Go to fact sheet. I already customized it, so can immediately see revenue. Okay. Going up. Okay. And then you can see the growth 17%, 15%, 6%. So it's still growing 2%, 8%. You can see the growth, right? When I mouse over, they can see the growth year on year. Then I'm going to click away. I can see the net income. Wow, also straight line one. Nice lah. Hopefully straight line forever, correct? Then next one, earnings per share, also straight line. Wow, looks quite good. So this is from the income statement. Can you see? Immediately you can see whether this company gives you more confidence. Okay, maybe we go through one or two more company. Can you give me some other possible company that you are curious about? Okay, in the meantime, right, let me show you this. Like example, Starbucks, all this, you can look at the okay, when you actually look at the individual financial report, right, you can see how they make money. It's very, very cool. And the financial report will explain a lot of things. It's just that for a start, maybe I share with you how to look at the numbers first. After that, then we go and take a look at individual financial report in the subsequent lectures. Okay, this is a company. Can you all guess what company is this? This is a company that I'm interested in to invest. Okay, wait yeah, I turn it too far away. Oh, consolidated. I think I was looking at the notes. Okay, this one is actually Xpeng. Xpeng is the electric flying car. So I was looking at it losing money every year, like Tesla when it first started. Okay, let me take a look. Last one, we do one more together, okay? Disney versus Netflix coin. Wow, a lot. Okay, but you all know how to see already, correct? So let me take a look at, let's say, coin. Coinbase, correct? Coinbase, you can see here. So look for the correct name. So if I go and look at the financials, let's go and take a look at the income statement, annual. Straight away, this is 201920, so 5 years. So in fact, we know that we can look at fact sheet already. Fact sheet a lot faster. Okay, fact sheet, revenue. Go or not? What you think? Go or not? Okay, this is revenue. This is net income. If you have to turn your head around, you know, sometimes when I look at all this, I was looking sideways, then I turn my head the other way. If you do that, means that you're not sure, correct? So sometimes not sure, then maybe you can wait a while, okay? So will you invest in this company? Okay, so you take a look. This company, net income, lose 30, wait, this one should be millions. 30 million, make 300 million, make 3 billion, lose 2 billion, make 94 million. What do you think? Do you want to invest in this company? I mean, maybe you want to invest, but let's say compare your choices, correct? Just now we saw, well, but Coinbase exciting, Costco quite boring, but Costco more predictable lah. So you can go and adjust. I mean, like decide for yourself. But with income statement, it's a lot easier to see, correct? So wait a while lah. Maybe give them some time. Just now you all say Netflix, right? Disney. One of my children's. So you sometimes you have to type the whole thing Disney, the word Disney. You can see got two, right? So which one? NYSE is New York Stock Exchange. BRA is Brazil. Let's go for the New York Stock Exchange one. Let's look at the fact sheet. Disney revenue. Oh, flat. Right, flat, right. This year grow by 2 point something percent. Let's look at net income. Click away, net income. Put you. 什么事情? Okay, what happened? Okay, so this is the net income. Earnings per share. Aiyo. Okay. So okay, actually, how do you interpret this? You can see that during COVID, can you see? During COVID, they got hit so badly, still recovering. You can see that, guys. So they are making money quite okay one. But their revenue is not bad. It's just that their cost is very terrible. So when you go and read more into it, right, how can it be? Actually, one of their key component that lost a lot of money during 2022, 2020, 2021 is the Disneyland, right? I think we know that, right? because the cost is still happening. Then they have to pay more money. They have to actually do a lot more things. But however, how did their revenue continue to increase? Disney Plus. Okay, so you can see even deep lah. During the Disneyland one, they dip, but Disneyland people all rush back in. They have a lot of other things, but still haven't cash back to 2019. But they begin to increase their revenue already. Again, is this company good or not? What do you think? Good or not good? Oh, you have to tilt your head. If you have to tilt your head, typically it's not sure. Okay, got it. So let's take a look at the next one. Okay, sometimes is your money correct? So if you imagine you're the American Got Talent judge. So if you need to think twice, should I press the button? Don't press the button. Maybe don't press first, lah. You know what I'm saying? But that you want to go for the one that you want to press the golden button one. Let's take a look at Netflix. This is the revenue of Netflix. This is the net income of Netflix. This is the earnings per share of Netflix. How you want to press the button or not? This one, do you need to tilt your head? Okay, in terms of now we are talking about good company. We haven't talked about valuation. We haven't talked about cash flow. We haven't talked about balance sheet. But how many of you find that this one give you a lot more like insights into, wow, maybe some companies I shouldn't touch? How many of you love this? You see that numbers tells a story. Numbers tells a story. Okay. Okay. So I do hope that this is useful for you guys. I think that every investor should learn to use this. And Jita is a very it's a free platform. That's why I think it's very good. Okay. So that's what I want to share with you guys today. Okay. Any other things you want to share? Any other good companies? Okay, you're talking about Google, defense stock. Okay, so there are quite a number of types of companies, which maybe the next segment I will share with you guys. So Peter Lynch actually classified most companies into 6 categories. So they are the growth, they are the slow growth, they are the medium growth, they are the turnaround, they are the asset play, and one more is what? Is it cyclical? Yeah, there's one more cyclical one. So we can talk about all these companies, but typically, most of the fundamental investors that we talk about, very famous one, Charlie Munger, Buffett, Peter Lynch, Joe Greenblatt, okay, all these Howard Marks, they like to look for companies consistently making money on. And they like to look at 10 years, like to go through COVID, like to go through financial crisis and still making money. This company should be a golden buzzer, okay, Ken? So, okay, let me come to an end portion. So in conclusion, accounting is the language of business and income statement is one of the 3 report cards. We got 3 report cards to look for. So in the next segment, we will be looking at today's income statement. Next segment, you look at balance sheet. If I have time, I can combine these 2, and then we can go into even more in-depth analysis. Okay, great. I'll see you guys next Tuesday. Bye-bye, and have a good evening. Bye-bye.